Hello everyone, good evening. It's great to see you all here gathered together for another speaker event. This time I'm pleased to organize this speaker event on value investing. So we have with us Jagpreet. Jagpreet is a value investor and he runs a company called Value Architects Capital Advisors. And Jagpreet would be sharing his journey as a value investor today. What are the opportunities, challenges and cases, some of the cases in value investing. And Jagpreet brings around 11 years of experience, and he has over 9 years of experience managing equity investments in Indian markets following the value investing approach. So without any further delay, I would leave the floor open for Jagpreet. So I give you Jagpreet. Please welcome him with a big round of applause. Thank you.
Thank you, Manan. I recently had a chance of meeting with Professor Bakshi, and as one thing led to another, I got an invitation from CFA to make a presentation out here. So thank you, Manan, once again. Thank you to Professor Bakshi, and thanks to randomness. Randomness always works out very good things in life, as most of the value investors know. So we began our journey in 2001-2002 when I was studying under Professor Bakshi in MDI. And prior to that, we had great interest in financials and economy. Under Professor Bakshi, we had altogether a different experience. He basically taught huge number of cases as he had done throughout his life. The first thing which he suggested to us when we were passing out of MDI was that we should start managing our own capital first of all. Usually in mutual fund industry, we do it the other way around. We start working with the other people's money rather than doing it our own capital, and that creates a lot of problem. So if you are starting with your own capital, one, you will start learning about how to make a decision. It will give huge amount of confidence, and as you go ahead, you'll obviously be compounding the money. The advantage is if you start early, if you have small amount of money, even if you are making mistakes, that's okay. It's going to recover sooner or later. But the only question which was into the mind was, do value investors really make money? Because when we talk about stock markets with anybody, this is the first image which comes into our mind, that people obviously lose money over a long period of time. I don't know how many people you know who have made money over a 30, 40, 50 year period and done consistently well. So we began by starting, we started by studying Graham, the letters which Munger had written, the letters which Mr. Buffett had written, and it serendipitously led us to studying people like Bernard Baruch, people like JP Morgan, people like Jesse Livermore, and all these guys. As you can see, if you start studying all these guys, they are from the beginning of the 20th century. So if you study the era between 1900 and 1930 was altogether a different era. When Buffett and Graham came into picture, a different era had started because reconstruction of the economy, US economy was taking place, and all the previous problems had gone and the froth has gone. So a new era has started, and then after 70s, people like Michael Millikan and KKR, when they came into the picture, they were doing a lot of LBO deals and leverage buyouts. So they started a third era in kind of a US. Now, if you study all these guys, Seth Klarman and Walter Schloss, all of them had a very different style of managing capital. For example, Seth Klarman had been managing mostly family offices, and he had been extremely conservative in his own analysis. He had been holding 30-40% cash mostly in his portfolio. Walter Schloss has a very different style because he never used to visit managements. He only used to sit in a single room and study about different annual reports. So if you go through all these guys, it will help you in two different ways. One, it will help you form your own style. It will help you figure out which kind of investing medium suits your personality. What suits your own temperament? Are you patient or are you aggressive people like Carl Icahn or Michael Millikan, all these guys? It will help you in that way. Secondly, if you study all these guys, it will help you it will give you a lot of fodder for the Indian markets, because even today Indian markets are very virgin. we are hardly seeing any deals happening in the Indian markets. What has happened in 70s and 80s in US, it has been like enormous amount of activity has happened. The two guys who influenced me the most were Professor Bakshi and Mr. Pabrai. As you can see, there are a lot of similarities, at least in the sitting style, but obviously they had very, very different styles of working. Professor Bakshi was sort of a private investor when he started off in 90s, and he was managing his own capital, and his style was primarily Grahamian. Basically, he used to study a lot of annual reports and invest without worrying about where the market is going. And on the other hand, you have Mr. Pabrai, who also was contemporary. He also started during 2000, and he was basically involved in what Buffett had written in his earlier partnership days, that you should try to figure out temporary distress in the opportunities in the companies. So his target was figuring out companies which are undergoing through a temporary kind of a bad phase. As they say, every good company has a bad period. So he is that kind of an investor. Now, over a period of last 10 years, I was lucky to have a physical mentor who could groom me, who could teach me, under whom I could learn. But looking at the kind of people we have, 50, 70, maybe more than that, investors existing in the US, I think huge amount of material is available on the internet, which can help you form your own investment style. And as Tim Ferriss would say, it is very important that you should have at least 5 mentors to groom you for any subject which you want to learn. Also, I would also suggest that in investment management, it is very likely that people, whosoever is taking the decision, whosoever is pulling the trigger, very likely he is going to make a mistake. And therefore, we have a concept of something called accountability partners, whereby we like to interact with the other fund manager who is also acting as an independent fund manager. Professor Bakshi has his own set of people, private investors, whom he likes to interact with. Similarly, Pabrai has introduced this concept by bringing in Guy Spear, who is based out of Switzerland, and he has a very, very different style. But they like to interact over the phone and moot out different opportunities. Also, it is important that when we are studying about different managers, we should wear 2 different caps. One, we should try to understand as what would a private investor do. Private investor means a person who is managing his own wealth. He's more concerned about the preservation of wealth. He's not worried about expansion of equity so much, and he's least bothered whether the markets are going up today or down today. He's least bothered about it. And on the other side, you have hedge fund managers, and you have fund managers who are into the markets 24 hours a day, and they like to get absorbed into the activity, and they like to do a lot of things. So it is important to study both the styles, different styles, because a fund manager has to run every day in order to save his job. There was a beautiful book written by Ralph Nader, I guess, called Zebra in the Lion's Country, whereby he had suggested that how a fund manager needs to perform every week, every month, in order to just save the job. So his interest would not be in buying a cheap stock. His interest would be into buying a momentum kind of a play, whereby which is rising, and he can quickly make the money so that he can save his job. I'm going to take 5-10 minutes to speak about portfolio management. When we talk about portfolio management, there are 3 different components which are equally important. One is the security analysis. Security analysis is something which all of us do. People in Bombay, they are very hyper about it. All the reports, all the analyst reports you will find would be on different companies, basically analyzing a business and analyzing a security. But there are equally 2 more components which for a fund manager become crucial. The second component is how would you like to allocate to a particular security, and third component is how would you manage between securities and cash at a particular moment of time. So I'll just take you through all these 3 components. For me, security analysis and business valuation, the one of the main kind of a area to look into is distress opportunities. Distress doesn't mean that a company is getting into CDR, but distress means that company is facing minor temporary problem which can be solved by the local actions of the management, and it can be quickly solved. It's not like it's going to take a lot of time. So we are always looking for a kind of a dip in the stock price, and we want to figure out what the management is doing and how the operations are working during that period of time. And the moment operations starts recovering, we want to ride onto the tailwinds. So why would companies dip? Why would good companies go into a bad period? There could be delays in capacity expansion. There could be strikes. There could be some temporary distress, fires in the plants, machinery breakdown. All sort of goof up happen. Now, if you look at what Mr. Buffett had done during his early period and even during his later period, he had been very much focused into figuring out opportunities from this segment. If you remember, the best deals which he organized, which he conducted, were Amex, when he bought Amex, and then he spoke about New York Times in his New York Post in his letters, and then he had spoken about Coke, buying Coke when it fell down, and then Salomon Brothers and other companies. Similar thing, if you read about what Mr. Pabrai had done, he also had been very, very aggressive into figuring out opportunities from these areas, right from Stewart Industries to Frontline to Register.com, and later on, recently, he had gone into companies like Bank of America and Citigroup. The second component is the allocation part. Basically, the allocation says that if you have capital available with you, would you want to get into your 30th best idea? The answer is no, of course. If you have 5 good ideas, you should allocate capital into them. So there is a beautiful book called Fortune's Formula, which basically talks about this part, allocation part. It says when the odds are in your favor, you should try to have that stock more and more into your portfolio. You should increase the composition of that stock into your portfolio. Also, if you study different managers, people like Munger had been very, very strict about his allocation part. He says that anything more than 3 companies in a portfolio is like a zoo. And same thing, Buffett had also been very, very strict about the kind of companies. He says that you should only have 20 punch card, and that is what you should always try to focus on. Professor Bakshi had a very different allocation policy because he was working as a private investor initially. Later on, as he progresses ahead, as we have seen his journey over the last one and a half decade, he's moving towards more and more concentration in his portfolio. Similarly, Pabrai, if you study his last 10 years, he had gone from, he initially used to have a very strict rule that he wanted to have 10 opportunities and he wanted to allocate 10% into each opportunity. So later on, when 2008 happened, it really hit him very hard. And he decided that he would not want to get into 10 into 10 kind of a mode, and he started using a basket approach. He said, I'll have probably 3 or 4% allocation into a single company, and if the company does very, very well, then I'll be able to invest maybe 19% into a single opportunity. But after 2010 onwards, he had several meetings with Buffett and Munger, private meetings, in which probably Munger had cajoled him into coming back into, again, a concentrated mode of portfolio. Right now, if you look into his portfolio, he has gone from 10 into 10 to maybe 15 into 4 or 5 kind of opportunities. In some of the opportunities, he has taken his position to 15 or 20%. This is the third component of the portfolio allocation, which suggests that at a time you need to be into cash and you need to withdraw your money from the capital markets. For a private investor, it is very easy task to do and much difficult for a hedge fund or a public investor. Now, I have tried to explain this model in a very simple Excel sheet. Let's say you have a starting capital of 100 rupees and you just park that capital into FD for 4 years, and you get one period in which there is a blast in the market. Markets fall down, like what happened in 2008 or what happened in December 2010, 11, or July 13. So if you have one minor kind of a dislocation in the market, you would be able to get an opportunity to plug in your capital into the market. And if you look at the compounded growth rate, even after sitting on your cash and doing nothing for 4 years, you will still be able to make 20-21% from your capital. And as we are getting more and more integrated, as the economies are getting more and more joint, you are finding that such boom and burst cycles are shortening. We have probably every such dislocation comes in the market every second year or third year, and therefore your maybe return on equity can rise up very fast. Now, if you look at what people like Seth Klarman had been doing, Seth Klarman had been sitting on 30-40% cash in his portfolio throughout, I mean, for a very, very long period of time, and he's not interested being in the markets. He's interested being out of the markets. He says inactivity is a big virtue in the market. Same is the case with Mr. Buffett, when he says that he needs to maintain AAA rating, and he maintains a lot of cash in his portfolio. And Munger also, you would realize what he did in 2008, 2009 was that in Daily Journal, he was sitting on huge amount of capital, and when the market tanked down, he was able to plug into the market very fast. So your decision making becomes very fast. You are able to plug the cash very, very soon. As a fund manager, if we go back into the lives of Seth Klarman and Munger and Buffett, most of these guys became sort of a private investors. Munger shut down his fund in 74 or 75. He said, I'll not be able to manage other people's money. Buffett also shut down managing partnerships, and he got into the mode of Berkshire Hathaway, whereby he said, whosoever wants to buy can do it in the market and sell it in the market. So I don't want to be connected with the investors and manage my investors day in and day out. And Seth Klarman was also lucky that he was managing certain family funds of close clients, and he was able to ride through different waves. If you study Seth Klarman and if you look at what he did during the 90s, he just refused to plunge into the market. He said, I'm not going to invest money, whatever, there may be a tech boom, there may be a IT boom, but I'm not going to participate in that. And he was able to transmit this message to his clients and share this philosophy with the clients. But for a fund manager who is managing other people's money, which is a kind of a temporary, non-sticky kind of a capital, it becomes a very difficult part, because usually this money comes at a wrong period of time. People get greedy at wrong period of time. People get fearful at wrong period of time. And that creates a problem in the market. As you would recall from this slide, what happened with the Bear Stearns, it might have survived for 50-70 years, but one single year, everything got wiped out. So the point is that, again, the longevity in the market is underappreciated. People are chasing returns day in and day out, talking about opportunities day in and day out, but they are not willing to get out of the market and relax as far as portfolio management is concerned. So I have an analogy that we are not into a sprint, we are not into a kind of a race, but we are running a marathon, and it is important that we should be able to survive for next 40-50 years of our life and very comfortably manage the client's money. The way I have organized my own clients is that we have a very fair understanding that I'll not be able to invest money when the markets are bad, and I pull out my money and I pull out the client's money. At the same time, when the markets are rough, we are willing to take plunge, and we are even willing to put in more money from the client portfolio. I have been lucky that few of my clients have their own operating businesses, so they are not too much concerned about what is happening in the market on a day in and day out basis. And from their operating businesses, they are able to pull in the money and invest in the market whenever the markets are bad. And here is a friend of mine, Ashish Killa, who's sitting here, and he's also a very smart investor. He also had been running an operating business and side by side managing an investment portfolio. So I'm sure it would be very easy for you to manage when the markets are bad. Okay, any questions you have, or we can go out with the presentation, and maybe in the end of the presentation we can have a question and answer session.
I have a question.
Yeah, please.
You mentioned that you have seen like the portfolio of Monish Pabrai or some of these other investors. So is it that they actually give you the portfolio? How do you see that? Because
It is all listed. It is all, I mean, you can do Google research and find it out.
13Fs and all.
No. I mean, 13F is an old method. If you are able to figure out 13F, well and good. But it is available on sites like Guru Focus, and there are sites like Corner of Berkshire and Fairfax, where people are discussing every move which Manish Pabrai makes. They are discussing that move. So they are very fertile, very good learning grounds for investor.
And then similarly, the investor letters like self-alarm and all that. Again, it's not easily shared. But again, are they available on these websites?
You can figure it out. I mean, you can find it out. Google or some fellow investors, you can find it out. Mostly letters are not publicly displayed because they have some restriction from SEC, but you can get it. Pabrai used to be very open and very generous in sharing his ideas between 2000 and maybe 2005-06, and later on after 2008 he has put a restriction on his website. So you need to have a password and a login ID to figure it out. I'm sure you'll be able to figure it out. Yeah.
Yeah, you're making a case for concentrated versus diversified, but Mr. Warren Buffett has 93 stocks in his portfolio. So how do you call him?
No, I'm not making a case for anything.
So I'm saying, therefore, your case study is based upon your portfolio size, obviously.
Yeah, you have to study different investors to figure out what suits your temperament. I mean, it's not necessary that something suits you. So if you are okay with 93 stocks in your portfolio, good for you. If you are not okay, I mean, doesn't make sense. Most of the good investors which I have found usually have a very concentrated portfolio.
So I was just making the analogy that since we made a reference in the
See, Buffett is buying a lot of operating businesses. The kind of money which insurance business is throwing, he's able to buy a lot of operating businesses. And obviously, if you're managing a $100 billion portfolio, you can't have one or two stocks. So, can we continue? Okay. So before presenting the case, I want to make a disclaimer that these are not investment tips. There is no investment advice. You have to study everything, and most of it is for academic purposes. So I'll take you back into a very old case study, which just to showcase that how we track distress opportunities in the markets. This is a case about Heritage Foods, a company based in Hyderabad, and they have got very good procurement throughout Andhra Pradesh region, and this was also managed by the wife of Chandrababu Naidu. And sometime around 2003 or 4, this company saw a sudden tank down in the price because there was a monsoon failure, and the profitability of the company had shrunk down. Now, if you look into the history of the company for last 10-15 years, this company had been generating very solid return on capital. They had been a dividend-paying company, and they had been growing very fast. Basically, milk procurement business means that you have to establish a procurement center around 30-40 villages, and then you have to establish a pasteurization plant and cold storage plant, and then you have to make sure about the logistical arrangements to spread the milk throughout the cities. So all of a sudden, this company tanked down. During that period, the company was generating something like 20-25 crore rupees of profit, and the market cap was around 100 crores. The price was 100 crores. They had 1 crore shares in the market, and the price suddenly, when we started buying, we were buying at 80-90 rupees. And we saw the price tanking down every day, and it fell to as low as something like 40-45 rupees. But when you understand the company, when you have thoroughly studied what the company has been doing, when you understand the business model of the company, it just gives you extreme confidence that this shall too pass. I mean, this is a kind of a temporary distress. Company will be able to overcome it, and this shall pass within some period of time. So we were able to kind of average down, buy more and more stock as the stock was falling. And subsequently, we sold that stock at maybe 2 years or 3 years down the line at a very, very healthy profit. And after that, what happened in 2007 was ridiculous because of the company getting into retail mode, and retail stocks were being valued very highly in the market then. This is another case study which I had taken. Ashish had organized one of the investor conferences in Delhi in which some 40-50 guys were there, and I had taken this case study maybe in 2010 or 11. And as you can see from the graph of the stock, this company had been building up cash in its portfolio slowly and slowly. Every year they used to sell some amount of fertilizer, some amount of DAP, and they were building up some amount of cash in the portfolio. Now, it is important to understand the history of the company as well as the psychology of the mutual fund managers, because the company, one, belongs to the Gujarat government. They have got support from the government, and secondly, the company had been coming from a very rough period in 98 or 99. They had a very rough period when the capacity addition got delayed, and subsequently, Gujarat government came to their aid to help them out and given them some loans. And subsequently, they were able to repay the loans, and they were building up cash. Now, as you can see, there was a massive transformation which has happened in the company over the last 10 years. And there is a very nice article written by Professor Bakshi, if you can find it somewhere on the net. It was called The Sex Life of Companies, in which basically he described the transformation which happens when companies are born, when the companies go through different processes, when companies merge together or acquire, go through demergers and acquisitions. So over a history of the company, a lot of transformation takes place inside the company. So as you can see, during 2009, the company had built up around 150 rupees of cash, and the share was languishing around 200 rupees. And we had estimated that next year, within 6-8 months, it will have another 50 rupees of cash. So we were buying it at almost the cash value. And subsequently, what happened in 2011 was that there was a reduction in supply all over the globe. China had shut down certain capacities, and caprolactam became a scarce commodity. So all of a sudden the prices shot up. Now here I wanted to mention one important thing, that although we might have started buying a company, let's say around 150 or 200 rupees, when you have huge amount of tailwinds which are coming, you should not debar or kind of go back and not increase your exposure into a company. Because when the tailwinds are there, definitely the company is going to make huge amount of bumper amount of profit. So you should increase your portfolio allocation accordingly. This also reminds me of an example of what Mr. Pabrai had been doing in the market for last 4 or 5 years. He got into a company called Horsehead. The symbol is ZINC. And he initiated that entry into that company during, I think, 2010 or 11 period at around $4 or $5 types. And recently he has bought a bigger stake in the company, even at $12, even at $15, even at $17. So the point is that if you know that the company's turnaround is happening and you know the value is increasing, you should increase your allocation to the company. You should not anchor to the previous prices, but you should always have the value of the company as your anchorage. Okay, as we can see, the food is also ready. So I want to talk about this company which is into a food sector. And before that, I just want to ask, what sort of edible oil do you use in your home? Which are the good brands? Anyone?
So right now, Cargill is acquiring all the brands.
Okay. What? Any other brand? Pardon? Rice bran oil. Which brand? Pardon? Fortune, Sundrop, Marico, Saffola is there. Right. And the second component of the industry is basically rice. Which brand of rice do you use at home? Pardon? Pardon? Lal Killa, India Gate. Pardon? Dawat. Yeah. So as you would see that both of these industries are actually, we are talking about one single industry, not two different industries. So I'll give you a brief explanation about how the industry works, how the rice industry works. The rice industry is composed of around 99% of players, which are either small farmers, millers, traders, or they are millers and exporters. And the paddy comes into the market during October, November, December period. These are only 3 periods when after harvesting the paddy comes into the market. And mostly small millers are operating, the volumes of the millers is very high, and they make a very tiny profit margin on milling part. They make just 3-4%, and then they pass on the rice to somebody who is trader in the market, people like Olam or Cargill or any other trader sitting in Lahori Gate or Chavadi Bazaar or Netaji Subhash Chandra Place, places like these. So these guys usually are operating on a very thin margin of 1 to 2%. That's it. They are traders. They don't own the crop. They just take the order, push the order forward, and trade. And then you have very limited number of players in the market who are actually branding the product, who are storing the product, who are aging the product, and finally selling it in the market. Now the industry which we are talking about here is basmati industry. It doesn't get sold as a normal rice. It's not like you cut the paddy and you sell it in the market immediately. You need to store it, you need to age in it, because aging brings the aroma, it brings the longevity, it increases the length of the crop, and then it gets sold after a period of either 1 year, 1.5 years, or 2 years. So if you had been noticing around, whenever you see a pack of rice available in any of the supermarkets, you would see a kind of a pyramid on the top of the rice pack, and it will state very clearly whether it is a one year old aged rice or 2 years old aged rice, what kind of rice it is. So let me talk about the foreign players existing in the industry, and you would be very surprised to see that there are a large number of foreign players rather than Indian players existing in the industry. You have people like Amira, which is a Dubai-based family, and this company is listed on New York Stock Exchange. This is not listed in India, and even the availability of the brand in India is very tiny. They have recently started doing it. You have Kohinoor, which used to be an Indian brand, and then McCormick came 2 years back, I think in 2011, and they bought over Kohinoor. You have companies like Tilda, which in last 2 months got sold to a company called Hain Celestial. Again, Tilda was a very famous brand, consumed primarily in Europe and primarily in UK. And Hain Celestial is a US-based FMCG company. And then you would have seen the ads of Madhuri Dixit coming in the different media 6 months back, because they were raising some equity from the foreign investors, and all of a sudden then they shut it down. She's not coming any longer in the media. But Nisa is another brand, And then you have Ibro. Ibro is a Spanish company. They are very prominent FMCG company, and they have also acquired some facility in Karnal. And as you can see, the interest of foreigners in consuming rice, consuming good quality basmati rice, is very, very high rather than Indian consumers. The two main Indian players as available in the Indian markets are, one is India Gate, as somebody rightly said, and second is Dawat, as again somebody said. And recently you would be seeing a lot of Amitabh Bachchan coming onto the TV channels, and he's telling his pyar ki bhasha. So I just want to describe the industry in a bit detail. If you do a Porter analysis on the industry, you shall see that this is a very scarce product. It is only grown in India and Pakistan. India produces something like 55 to 60% of the crop. Pakistan does another 40% of the crop. Because of turmoil in Pakistan's economy, the crop size has gone down and the exports are going down. But again, it's a very scarce product. It's a global crop. It's not like wheat or normal rice, which gets traded by Olams and Cargills all over the globe. So it is only produced in India, traded by the people who are sitting either in Punjab, Haryana, or sitting in Pakistan. It's a simple product. It doesn't require any high-tech food technology. It's not like your wafers, which one day you'll consume and second day you'll change your brand of wafers. And it's not processed food. And again, it's the highest quality rice available in the market. If you would consume normal rice would be what, 10 rupees, 20 rupees, 30 rupees a kg. But this rice gets sold at something like 200 rupees a kg, 300 rupees a kg. And if you consume organic basmati rice, which is grown with the certified limits of usage of pesticides, etc., it gets sold at something like 450 rupees a kg also. So we are not talking here about normal rice. We are talking about something which is very, very limited in quantity. It doesn't have any competition from China or Brazil or Argentina or any African countries. It's not like a cotton crop, which people in India will grow and suddenly Chinese will double up their production and the cotton prices in the market will fall down. Or it's not like coffee that Indian producers will grow and something will happen in Argentina or Brazil and there would be a wide fluctuation in the crop. Again, government doesn't regulate this crop because the crop size is very limited. Out of 107 million tons of rice which is produced, just 5-6 million tons is basmati rice. Again, it doesn't get affected by what is happening in the economy, war, global patterns, etc. We can talk about it a bit later. Let me complete my point. These companies usually have a very strong hold on distributors by the virtue of controlling the crop, because if you have a limited crop coming from the farmers, if you hold that crop and age it, you will be able to command the prices in the market. So these companies have very strong hold in the distributors, and Dawat and India Gate are two largest players in the market existing today. These companies have also a strong hold on the farmers. They supply seeds to the farmers. They have India Gate is basically KRBL, which has developed seeds along with the Pusa Institute, and they have developed this variety called 1121, which is a bit genetic hybrid crop. And the advantage is that they ensure the length of the crop and they ensure the kind of period which crop takes to reap. And they also distribute the seeds to the farmers. They hold the seeds and they distribute the seeds in the agricultural market. And India Gate is also, KRBL is also doing organic and contract farming. Basically, they get certain orders from abroad which says that, okay, we are willing to buy crop maybe at a higher price, but we want to totally pesticide free and all those chemical free crop. So India Gate has an advantage that they are doing a lot of contract farming with the farmers. Now speaking about people like KRBL and Dawat, I'll talk about the premium which they get from the market and what is the threat of new entrants. Now this market requires huge amount of marketing budgets, very good balance sheet in order to hold the crop, in order to procure more and more crop from the market, as I'll tell about it later on. And it requires further organizational and management strengths to manage the entire supply chain. If you look at last 10 years of what the company has been doing, these are the figures which company has been producing. I have taken the liberty of adding 2014 figures by just extrapolating what happened in the last 3 quarters. And if you consider the CAGR which the company has been generating, the margins have been going up and the profitability has gone to almost 15%, and your PAT CAGR has been close to 35% over last 10 years. Now please see that we are not talking about a very tiny period of time. We are talking about 10 years of consistent results in the market. If you look at the ROE figures for last 10 years, ROE is also been something like 18 to 20% for last 10 years or so. And just to give you an estimate of the size of the company, can you guess which is this company which starts from M? Can anybody guess? It's a famous FMCG company. Marico, definitely. So Marico is like producing 500 odd crore rupees of PAT, and you have India Gate which is producing another 260 crore rupees of PAT, and then you have this B which stands for Britannia, which is like 350 crore rupees of PAT in 2014 estimated. Again, looking at last 10 years and 5 years, you can see the kind of numbers which these companies are producing on a CAGR basis. Now, I have also tried to compare the margins of the different companies, HUL and Marico and KRBL and Britannia. As you can see, the margin profile is not different from what other FMCG players are gaining. And if you look at last 10-15 years, the margins have moved from something like 7-8% when they used to be pure commodity trader to something like 15-16% when they are actually becoming branded players in the market. Their branded branded supply has gone in last 5-6 years. They have gone from almost 50% to almost 95% today. So this is the kind of change which has come in the market. No, they haven't acquired anybody. Because volumes go up and then the margins also go up. I'll just share the balance sheet of the company with you. This is as of September 2013. Now, most of the people tell me that this industry is highly leveraged, but if you look into the September 2013 balance sheet, they have a shareholder equity of around 1,000 crores. They have long-term borrowings of 119 crores. Again, these figures are in lakhs, so I'm converting into crores. You have short-term borrowings of around 300 crores, and against that, you are sitting on a cash equivalents of almost 340 crores. And along with that, you have an inventory on your books of around 550 crores. And basically, when they are buying the inventory, they have to age the inventory for a period of 1 to 2 years. And when you are aging inventory, some part comes in September balance sheet, and some part comes in March balance sheet. So it keeps on fluctuating. But you have to, in order to understand this company, you have to see it from the vantage point of September, October, because that is when the season starts. As the season will progress, especially now since we have already passed October, November, December, the company will utilize all this cash available, 340 crores. They will utilize and convert into crop. They'll also take further debt from the market, which is an annual activity, and they'll add more crop out here in the inventory. And as the season progresses as we reach towards September, they would have consumed certain amount of crop, and they would have repaid a certain amount of loans every year. So it is as good as a bank which starts in October and it shuts down the shop in September, and it liquidates the entire portfolio and hands over the money to the company. Now this is something about KRBL which I wanted to share. If you look into this slide, the top export realization, this research is by CRISIL and data has been provided by the company. The company consistently takes something like 15 to 20% more value for its own brand, because the demand for its brand is very high. If you look into that corner, it describes the kind of milling capacity which the company has. KRBL in the market has got the maximum capacity, followed by REI Agro, which is not only into Basmati but different other things. Then you have people like Kohinoor, and then you have people like LT Overseas. And if you look into their distribution network, this is again from the annual report of the company. They have got around, they are reaching around 6.5 lakhs retail outlets. Their presence in domestic retail chain, they are catering to almost 20 chains. Again, some data is given, the export countries, and their 25% of the branded Basmati exports from India is from their corpus. 30% of share in branded Basmati sale is from their corpus. 35% of the Basmati seeds in India are provided by KRBL. So as you can see, the company is right from the farmers till the retail end. They have a very strong connection with everybody. This again is a slide from the company which showcases the kind of market share which they have in 1 kg pack, 5 kg packs, and 10 kg packs. So maybe you can check out the annual report and get this data. This showcases the kind of branded product which they are exporting. As I indicated, this is only for the export part, but it shows 83% of the total sales through KRBL brand is a branded product. But for the overall company, the sales have moved something from 50% branded, non-branded, to something like 95% branded. So what is the kind of strategic advantage that the company has? What are we talking about? Is there any moat in this company? As you shall see that the balance sheet is a very strong moat in the company. If you have a strong balance sheet, it will enable you to get more and more crop. By the way, this is the only crop which government of India would allow you to legally hoard. You can't hoard any other crops. So balance sheet allows you to hold a great amount of crop. It also lets you acquire assets, as they had done somewhere in 2003 and 2004 when they had gone ahead and bought a defunct plant in Dhuri, Amritsar at something like 20 cents to $1. It also helps over off-season period to acquire more crop when other farmers are in distress and they want to sell the crop and go away from the market. So balance sheet is of great strategic advantage in this business. The holding capacity, basically by this I mean is that they have land holdings of around 140 acres in Ghaziabad and another 140 acres in Dhuri. So when you are buying something like 5 or 6 lakh ton of crop, you need to store that crop properly so that this can be ripened over a period of 1 to 2 years. It is important that the kind of space which you have, the kind of sheds you have, should be physically should be able to physically protect the crop from infestations, from insects, etc. And it is important that you should be able to manage humidity, temperature, and all those parameters for proper ripening of the crop. Now, also you would see that holding a crop for a period of 1 to 2 years give them a very strong natural hedge against all sort of goof-ups happening in the economy. I mean, there could be a food scarcity, there could be a drought, there could be a war. Anything which happens, they have material lying in their godowns whose value will shoot up, as you would have seen the kind of growth the company has been doing over the last 10 years. I've already spoken about the land holdings and the storage capacities. Again, the reach of the brand, reach in the brand, I've already spoken about this part. The management of the company is, if you would have met, they are not very forthcoming, but if you inquire, if you study them from farmers, and if you inquire about their brand in the market, people have good words to say about them. If you do your own scuttlebutt, they were able, because of the strength of the balance sheet, they were able to acquire a plant in Dhuri in 2003-04 period at a very, very low cost, something like 15-20 cents on a dollar. They have already executed one buyback in last 1 year. When the markets were falling down, they already had an approval and they had gone ahead and done a major buyback. And as they had indicated in the con call recently, that they are also looking for another buyback. And they have also clearly mentioned that they are going to enhance the dividends this year. Here I have tried to present the price to P ratio, price to earning ratio for last 4 or 5 years. In the top column, if you see that the size of the company has grown from something like 30 crores PAT to as large as 260 crores PAT expected this year. The valuations of the company have fluctuated during 2008 period. They have gone to as low as 2-3 P multiple, and during good periods they have been like 14, 15 times also. If you look at period before this, during 2005-06, they were getting a consistent valuation of something like 13-14 PE multiple. So right now, when the stock price is depressed, management has already gone ahead and done one buyback, and they are looking for another buyback. Now, here I want to present a very interesting analogy that these sort of companies which are available as low-hanging fruits, most of the momentum players or mutual fund players are not very keenly interested in such kind of companies, because they say that it's low. So it's like if you have $100 note lying on the street, you would say it may be fake. So they are not interested. But usually during these times, a lot of private investors, they acquire substantial stakes in the companies, and they just like to sit on their ass. As you would have seen what happened in recently, Relaxo has become a very popular case, especially with the Bombay fund managers and analysts sitting in Bombay, and they are not viewing that when Relaxo used to be just selling at a multiple of 3-4 times in 2009 and 2010, nobody was willing to look into it. The company was hardly producing 10 crores then. Now it is producing something like 70-80 crores, and valuations have gone very high. So this is a kind of difference which comes when you are managing your own private money and you're not worried about too much of fluctuation in the market. You can buy such kind of very underappreciated companies in the market and sit. Also, I would want to take you back to the sheet which I presented in the first part. If you shall see that most of the companies in the market are already acquired by the foreign players. So there is actually hardly any large player existing in the Basmati market which belongs to Indian-owned entity or belongs to Indian-owned shareholders. Giving you an example, Amira is already listed on New York Stock Exchange, and Amira is selling at a valuation of something like 16-17 PE multiple, current earnings. You have Hain Celestial, which have bought Tilda recently, and they have bought it nearly at 2 times sales. The sales of the company were around 1100-1200 crores, and they have paid something like 2,300 crores to acquire the asset and the brand and the procurement system and the distribution system, everything. You have Kohinoor, which has already been sold, and Ebro, which has already acquired a facility in the market. So as you shall see that most of the assets are already, basically foreigners are appreciating these assets much higher than what Indian investors and Indian markets are appreciating. So what are we looking here at? We are looking at a worst case scenario where the company keeps on producing, keeps on growing by something like 20-25% every year and keeps on giving us a return on equity of 20%, and nothing much happens on the PE expansion front. Still, I'll be able to make 20-25% on my equity. In the best case scenario, when the equity expands, the P multiple expands to 4, from 4 to something like 12 or 15, I am actually looking at a massive multi-bagger kind of a thing from this company. But you would be questioning what are the triggers, why should things happen with this company now, why were they not happening 2 years back or 3 years back? So as I say, size does matter. The profitability of the company has gone from a level of 40-50 crores to now almost 250 to 300 crores. So it's not a small company any longer. You can see that the visibility of the product is increasing every year in the markets. 5 years back, at least in my home, we never used to consume basmati, but as we are progressing ahead, it is clearly visible in most of the retail chains. You can buy it very easily. And aspirational and income levels are going ahead. So I am more interested in consuming something which is better product rather than low-end product. Again, as they say, a lot of changes happen in the company's management and a lot of transformations happen. So Munger has mentioned that you should look into the companies which are cannibalizing themselves. Basically, they are eating themselves out. They are buying back their own stocks whenever they are cheap. So this company has already executed one buyback. This company has spoken publicly on the con calls about considering a second one. And they have also spoken about paying a higher dividend this year. This company has also talked about getting into new initiatives like rice bran oil, somebody had stated. As you shall see, rice bran has become a visible market in last 2 years. A lot of ad spend has been made by Fortune and especially Marico. Marico, if you look into the product and you see the composition of the product, they have got 3-4 products. And 90% of the oil in that product is rice bran. And then they mix it with either soya or safflower oil or something else to produce. So they got multiple brands. And the advantage of this oil is that it is much cheaper than other form of oils available in the market. So most of these companies are trying to create a new market out of it and push it. And it's more or less a kind of a cash and carry business because you don't have to build up inventory. All you have to do is produce the product, make a brand out of it, make sure that it is available in the retail channel which they already have, and just place it there. The company has also spoken about getting into atta segment, which although a lot of people, Pillsbury and ITC and all these guys already are doing, but again it's a very fast moving kind of a product. With their brand and distribution channel available, they have spoken that they would be interested in getting into this market. As I have already spoken about the competitors which have been acquired by the foreign companies, and I have already spoken about the kind of valuations which these companies are getting in the public markets abroad. Moreover, if you look into the recent deals which have happened in the FMCG segment, somebody was telling DFM, which is a maker of cracks, got sold at something like 25 times P multiple. And day before yesterday, there was a deal on Balaji Wafers, which happened at maybe 4 times sales. And you have so many deals which are occurring. So private equity guys are the kind of people who will come into the market when the market is already supremely mature, and the multiples have already expanded to 20, 25 times. And these guys are not in need of any private equity capital, so they are more interested in consuming their own stock rather than going for a private equity. So I think here I rest my case, and we are open for question and answer session. Yeah.
There's usually this thing about companies being dividend paying or whatever. So, but if a company is paying dividend like 2.5% yield, is that something you consider as a worthwhile consideration? Or, I mean, is 2.5% of dividend yield still a good sign in terms of the company pays a dividend yield?
Dividend yield?
Yeah, the yield.
It all depends upon what is the kind of requirement which the company has. If the company is able to consume it and reallocate the capital maybe at a higher return on equity, I wouldn't mind if the company is not paying me the dividend. As a private investor, I am interested in getting the dividend because I know a lot of private investors who are existing in Indian markets, and their focus is highly on the dividend part because they need to run their own house, right? They are not getting income from anywhere else. But for a mutual fund guy, it may have a different consideration. For me, it doesn't make a difference if the company is compounding at 20-25%. I'm okay.
Right. So as a value investor, you wouldn't say that dividend, like a dividend payout is a major consideration, except in terms of your cash flow requirements.
Yes.
In terms of valuing the company itself, you wouldn't say that they pay a low dividend, maybe something's wrong.
Yeah, not at all. I mean, if you have to figure out whether something is right or wrong, then you should rather do a scuttlebutt. You should talk to their vendors, you should talk to the suppliers, you should talk to the competitors existing in the market. And if they have if they are doing a bad mouth to the competitor, then something could be wrong. I mean, dividend is not a highly considerate factor.
Because when you say supply,
Right?
Yeah,
Yeah, he has raised a very pertinent point. This is the 5th generation of the company existing in the market, and they are like 100-year-old firm in the market. It's not like a fly-by-night kind of a young operator. They are very old guys, and they are least bothered about hoarding or siphoning off money. It's a Delhi-based company, yes. Thank you for making that point.
Basmati is very popular now in Saudi Arabia, used to be the main market, market. Now is it getting popular and getting into new market territories also, like South India, exports in Europe?
See, again, we are talking about a commodity which is a very scarce commodity. We are talking about 5 million tons of crop. I mean, whosoever wants to buy, whosoever is the highest bidder can acquire it. Mostly foreigners are more interested in consuming it than Indians. But as our aspiration level is going up, the management was telling me that the consumption in India is growing at a rate of 35% now. So it has started moving ahead. But again,
The opportunity size limited by the availability of the Basmati crop production?
yes, that's a very interesting point which he has raised. Yes, the crop size is, the volume wise, it is limited. But every year, because of agricultural inflation and because of demand crunch, demand supply gap, every year the prices of the company keeps on, the prices of the crop keeps on rising up. And something which a very interesting point which you have made. This balance sheet, if you look into the balance sheet, this I have presented it as of September last year, and the inventory on this balance sheet is valued something at 22-23 rupees, and right now the price in the market is something like 45-46 rupees. So in fact, this 500 figure is a book figure. The actual figure is 1,000 crores. So you already are sitting on a profitability of another 500 crores. Along with that, during O&D, October, November, December, the kind of crop which they have bought, they have procured 5 lakh tons of crop. And the crop they have acquired at something like 38-39 rupees, and again the prices have shot up to 45, 46, 47 rupees. So you are getting a profit on this inventory as well as on the new crop which they have purchased. And this is not kind of this happens every year.
Even if the opportunity size tends to become, because of the availability of Basmati in other regions other than Punjab, Haryana, for example, they were a news item in Madhya Pradesh also.
Yeah, they are.
Also contention that we are also producing the
Yeah, yeah. Yeah, so that's a war which PIDA is fighting against Madhya Pradesh. We don't know what is going to happen, but I don't think the crop size is going to increase by leaps and bounds. But having said that, something very interesting is happening in the market. Earlier, the entire market used to be of a seed called Pusa 1121, and now in last 2 years, a new seed which has come is Pusa 1509, which is a better quality seed having same elongation, same aroma, same all those functions. But the period of reaping that, harvesting that seed is shorter. So it is expected that farmers in Punjab and Haryana are going to sow more of those seeds, and it is expected that crop should be a bit higher. So it will benefit people, all the marketeers and all the traders who have a very strong balance sheet. It is going to benefit them.
Any hybrid seed plant for basmati?
These, I think, this is all hybrid. This is all worked upon.
That immediately multiplies the output in the other crops.
I don't know. I don't know. No idea. Pardon? Dividend they had paid last year, I think 80 paisa or so. So you can calculate the yield. The price is right now 50 rupees. But dividend, they had been paying a very low dividend for last 2-3 years. But this year it's expected that they shall pay a higher dividend.
In the rice company, there's a lot of corporate governance issue. As a fund manager, used to face the problem that
Which rice company are you talking about?
industry as such. That's the issue with all agro companies. That as the fund manager is going to buy it, corporate governance issues. So when the profit increases, the P goes down, and liquidity never comes into the stock.
See, the best way to figure.
What is your tenure on KRPL? When you think this can move out of this vicious cycle of low liquidity in stock and corporate governance issues?
See, I think liquidity is going to be a constraint because the management has bought the shares from the market and some private guys are holding the shares. As far as corporate governance is concerned, as I had answered this gentleman, you can figure out corporate governance of a company by looking at their tax returns. You can figure it out by talking to their employees, by talking to their vendors, but by doing some scuttlebutt in the market. If you do that, you'll be able to figure it out. And it's not like an invisible product. It is not like guar gum, which we don't know what is going to happen to it. But it is something which is visible in the retail stores. You can see it day in and day out.
You said tax returns.
Pardon?
Where do you look at the tax returns?
You can get it from the PL accounts, balance sheet PL accounts.
So you're saying the actual tax paid, not the...
Yeah.
There is another company in the same sector with a very fascinating investment story 2-3 years back, and even Madhu sir of Reliance Mutual Fund was very interested. The stock was then at 50 rupees and today it's at 4 rupees, and that's IAIP. So as a value investor, I have two questions to it. First is, what went wrong with the company in the same sector, which was the biggest player then in terms of milling capacity and in terms of output? So what went wrong in that company that the stock has come down from 60 to 4 rupees now? And second is, as a value investor, will you be buying a stock which is REI Agro at all-time low, or buying a KRBL which is at all-time high?
No, all-time low and all-time high, again, it's a wrong anchorage. Don't anchor it with the price. Anchor it with the valuation of the company. Now, what happened, what wrong did go into REI Agro, I would not be able to comment, but if you listen to the previous con calls of the management has stated something very seriously about the company. And if you do some scuttlebutt, you will figure it out what happened. And along with that, REI Agro was a super hyper kind of a growth story because they were getting into that 611 retail chain. If you would remember, they had started REI 6, right? 610 or something. So we don't know what happened. But we were cautious about that kind of things which they were talking about. They have some 60-70 megawatt power project. They do sell it out. They do sell it out. No, margins are what they are. I mean, it's a blended margin. It's not segmental margins.
What is the promoter holding in this company, and is there an opportunity for private investors to buy out? what the study that you're saying is very cheap.
Promoter holding is something like 58 or 60% odd percent, but why would they sell it out? I mean, it's a good asset for them. It's a fifth generation of company. Had they wanted to sell it out and run away from the country, they would have gone long back. I mean, they are not interested. यार finally तो आना घूम फिर के इंडिया में ही रहना ना. So this is, and it's not like their family is also very large. They are 3 brothers at the top of the market. You can see certain videos are there on YouTube, and they are talking about their company. Family is large. Their own, their daughter is working in the company, and they have a good hold on the market.
What is the downside you see with this investment?
I couldn't figure it out. If you can help me, I'll be glad. I'll be sitting there.
Next generation family changes, any impact on that?
अभी कुछ आया नहीं है. Their only daughter is working in the company. That's it.
3 brothers, they have been in the company for long, and the next generation of 3 brothers is also.
Next generation hasn't come into the picture yet. Only one daughter has come into the board of directors, and she is sitting in the office every day and doing stuff. Yes. Yeah, you can do all the numbers. यार number crunching आप कर सकते हो अपने आप. Profit keeps on fluctuating. Yeah, what happens? I mean, yeah.
You mentioned there is no threat of substitute. Do you see a brain called quinoa capturing a chunk of this market? Say,
No idea. Yeah, you are asking very complicated question now. You should be in the next con call with the company and grill them properly. Yeah, it's like I was talking to one of the value investor, and he was talking about something called page industry, and he was telling that page industry is producing a lot of underwears in South India. So my only question was, have you seen anybody's underwear? I mean, something which you haven't seen, how can you describe? And still, I don't know, yaar. I don't know. Maybe you should ask them in the next con call. Maybe you should do that. Some advantage this year only the government has given them. But again, you're looking at a very short period of time. Professor Bakshi talks about something called zoom out, which means that you should see from a bird's eye view. Look into what has happened in the company in last 10 years, 15 years, 20 years. Has the company not gone through periods where there has been economic turmoils, there has been 9/11s, there has been 2008 crashes, there has been droughts, there has been wars, there has been so much goof-ups, and still the company has been able to produce things. So the way to look into any opportunity is basically you should try to figure out, is the management ethical or no? Are the management shareholder friendly or no? That is question number 1. Secondly, you should figure out how the management has done over a long period of time, because every good company goes through a bad phase, but it's only during 10-15 years of their capability you try to understand their capability, right? And thirdly, are the products actually available in the market? Are you willing to consume it? It's like Buffett saying that you would want to have Wrigley in your mouth, but you wouldn't want to pay 5 cents less to consume any other crap product in the market. So is the product actually there in the market and you are willing to buy it? That's the kind of questions which you should ask. Yeah. Yeah. See, averages, वो कहते हैं ना कि one father took his kids inside the river whose average height was 6 feet, and you remember that example. So don't work around the averages. It's there is hardly any industry. Yeah, what industry are you talking about? How many listed players are there in the market? One KRBL is there, second Dawat is there. Then you have names of companies which he has mentioned which nobody talks about, right? And then you have 5-6 companies which already has been acquired over last 6 months by foreigners. So if you have to see the PE multiple and think it how much a foreigner would be willing to pay for it, right? And you have the numbers for it.
Actually, I just want to know the long-term growth rate approximately you must have while preparing your presentation.
Yeah, you can do all those PE multiples and analysis. You can do that. Yeah.
Could you please spend some time discussing your own journey and value investing? What were some of the key mistakes?
I thought I was spending the time on that only. Any specific thing which you want to ask?
What were some of the key mistakes that you made and what did you learn from them?
Okay, when we initially started, we were, or was very much into Graminian kind of investing opportunities. We were just looking at price to earning, price to book, dividend ratios, and cash flow ratios, all those ratios. And we used to run a software called Provis or Ace Equity, whatever you want to use. And we used to find out companies which were, but having said that, those were periods in which we randomly got out to be very lucky because markets were in boom phase, and between 2003 and 2007, every crap which you would have bought, despite of whatever crappiness would be there inside the company, it went up, and we did learn about it. But as I progressed, as I learned about what Mr. Munger and Mr. Buffett and especially Mr. Pavrai had done, and along with that evolution of thinking of Mr. Bakshi also, so we were targeting more and more distress opportunities or kind of companies where we can buy, hold, and sit on our ass for a longer period of time. I was not very keenly interested into getting into the special situation kind of thing, which a lot of investors like to do because it gives them excitement and kick out of it, doing buybacks and demergers and those kind of stuff, reducing the value of the residual shares. As Munger had stated that it's like picking up pennies in front of a road roller. So I was very, very afraid of getting into that arena. And especially after 2008, we have moved into companies where there is a kind of a problem and it can be solved, or there is a very strong tailwind in the industry and consumption story is going, or that kind of thing. Mistakes, yes, over a period of time, I had made multiple mistakes, and that's the journey of a value investor, that no matter how smart you are and no matter how many accountability partners you have, you still would be getting into some sort of a crap. So I did invest into a food company which is into oil segment somewhere 2-3 years earlier. It was called KS Oil, and it had fallen from a very high stock price. And as you would see that all the marquee PE investor, all the names which you can produce out of your cookbook, they were already invested into that company, and they were sitting on the board, and they knew inside what is happening inside the company. And still you have a company which just went all from, I think, 100 rupees or so to something like 10-15 rupees. It was something like commodity trading, but when I was making an investment into it, it had already fallen to 10 rupees, and I was making an investment as an option, not as a stock. I mean, the bet was that I could lose 1 or 2% of my portfolio, but I could make 4 or 5 times out of that as an option, and it was a very tiny bet. But having said that, it was made under extreme uncertainty and non-availability of information. So,
there was a white knight story also, I think, doing around.
Pardon?
There was a story of a potential savior from the south.
हाँ, वो अभी भी चल रही है, वो शिवा वाली story, और अभी भी कुछ चल रहा है उसका. A lot of private equity guys are chasing that. So apparently they have got good plantations in Vietnam, and they have got decent name in Morena. The big name, and yes, right.
But I did the same thing at 6 or 7%.
Wonderful. Wonderful. Great.
You spoke about KRBL in great detail. Do you see any expanding moat in KRBL? What is the nature of that expanding moat, and
ARBI really enjoy any kind of pricing power? Has it been increasing over the past few years?
Yeah, pricing power मैंने दिखाई ना आपको that their branded product has gone up from 50% to something like 95% now, and they are already getting a 15-20% premium over the pricing of other competitors. And it's not a company data, it's a EPITA data, the industry body. It's their data, and you can go into the market and you can do scuttlebutting also. जो चीज़ दावत की मिल रही है मार्केट में 150 160 की, these guys are selling at 180 190 rupees. So, and that is also for Indian market, that's a high end product. For a foreign market, it's not a high end product. So जो बाहर माल जा रहा है, that good is even more premium priced, right?
Chance of this MP thing coming through Basmati majority produce हो रहा है.
Your guess is as good as mine guess, yaar. No idea. होगा तो it is good for them because volumes will go. Yeah, volumes will go up.
One quick question on the year-on-year earnings. I think you showed that almost last year, 2013 was 129 crores, while this year you're expecting 260 crores, so almost 100% jump. Is there a particular reason for that bigger jump, and are you expecting a similar type of growth, or that is one-off?
Yeah, volumes have gone up, the margins have gone up, and therefore the prices have gone up. So
I'm just interested in the PAT. So 129 crores 2013, and then 260 2014. So it's almost double, right?
yeah, because your interest cost has gone down, na? Your interest cost has gone down, and other things have. I mean, you can you can do all that analysis and figure it out. Broadly, you should understand what is happening in the company, what is happening in the industry, how the industry is progressing.
Yeah, but this is interesting that you're saying that almost 3 or 4 players were bought out in the last 6 months.
Not 4, I think 6, 7 players. Yeah. Yeah. Can I have some water, please? Water. Yeah.
Let's talk about this developing circle of companies.
Yeah.
So I want to ask, how do you develop apart from like taking annual reports? Because like if you go into industries, you might understand many industries. But then how do you, at what level till what level do you go to develop this circle of
Yeah,
companies?
every industry you will get into, it will take you at least 5-6 years to get comfortable to understand what is happening in the industry. I mean, I had been studying this company from 2006 when they did Dhuri acquisition. So it took me quite a while to understand, interacted with huge. You have to do scuttlebutt, interact with people, study their past annual reports. As I had earlier said, keep some mentors. As Tim Ferriss has said, you should have at least 5 mentors for a line of profession you are in. And if you can't have a physical live mentor, at least read people who have already executed, people who have written down material. I'm very happy that people like Professor Bakshi are giving so many interviews, which is actually helping people to learn different things, right? You have people like Pabrai who are coming every year to MDI. I would wish if you can possibly go and request Professor, go ahead and sit through his classes, or at least read his blogs and the presentations which he's making. Go through them, yeah. Otherwise, it's very difficult, yeah. It will take you, as somebody had done a study and they have stated that you require at least 10,000 hours to master something, which means that even if you keep working for 10-15 hours a day, it will still take you 4-5 years to understand kya ho kya raha hai, yaar. So you have to start. The earlier you start, the better it is for you, because at least 10 years, 15 years down the line, you will be very, very superior. As Mr. Buffett says, all knowledge is cumulative, right? Yeah.
Do we have any functional equivalents of 13F disclosures like they exist in the US, in India?
नहीं यार, कुछ नहीं है.
So how do you figure out
Cheating, India में cheating is not allowed. But still you can see the shareholding patterns of the companies and figure it out. You can see the bulk trades, block deals which are happening on the stock exchanges. At least make it a point that you are reading BSE, NSE announcements every day. Because unless until you are not reading them, you will not get the fodder for the deals. You will not understand. and connect to as many people as possible, interact. There are a lot of forums on the net. You will get a lot of details out of them.
How do you go about generating investment ideas? What are your starting points like?
Yeah, as I said, when we initially began, we were looking into very statistical kind of modeling. We were doing running our queries through Provis or Ace Equity to figure out investment ideas. But as we have progressed, we have already consumed at least 1,000, 1,500 companies, right? We have already gone through them. We have already met their promoters or interacted about them with so many people. So it automatically helps that you see the price and it becomes easier for you to understand कि industry में problem है या नहीं है, कैसे चल रहा है, नहीं चल रहा. Thing which I want to share with you again, most of these investment stocks generate huge amount of greed when you are sitting in the forums, and it seems that the other person must be making huge amount of money and हम तो यार पीछे रह गए, नहीं हो नहीं रहा, right? It generates huge amount of greed. You have to understand that you are not in a sprint out here. You are running a 50-year, 60-year marathon. So it's okay even if you take some time to learn. Don't make mistakes. Don't drain down your money. Just go through it. Be relaxed. If somebody is making money, person to your right, person to your left, if somebody is doing, ignore them, yaar. Buffet, tabhi he sits in the corner in some of the chota sa village and he's doing his own work. So don't worry about what other people are doing. Don't look into Twitter. Don't look into blogs. Go there from a perspective that you want to learn about a company, right? You want to understand factual information. Don't go there from a perspective कि यार आज तो stock ऊपर चला गया और आज stock नीचे आ गया. It'll actually create a lot of dissonance in your mind, and sooner or later you will burn out, right? Yes, sir. My professor from MDI. Thank you very much.
Well, because I am asking you a question.
Thank you very much, sir.
Very basic question.
Yes, sir.
I don't understand these industries. You talk about value investing, and you mention things like try and look for distressed valuations. Look for operational blips which hopefully are not because of poor management or some inherent problem, but which hopefully you will get over. Let me take a couple of examples. Take TCS. Ever since I can remember, ever since I think the public issue, growth has been consistent both in top line dollar terms as well as bottom line. Valuation has always been on the higher side, about 24 on current PE. Future revenue, the order book is big, and therefore visibility of the future is high. You talk about dips. Companies like TCS never give you dips. In fact, the only dip I saw was probably 4 days ago when you had that analyst call.
No, that is not a dip. That's just fun in the market.
2009 was again IPO price. These are companies, and there are many other. HDFC Bank, your net interest margin remains the same. Your NPAs remain very, very low, irrespective of what's happening in the market. For God knows how many quarters it's been 25, 30+% per year. So my point is, when you look at value investing, try and identify companies, which frankly I'm not comfortable with investing like this. When I have options like this, which anywhere are giving 20-25% comfortable return, and Warren Buffett in any case talked about 22% CAGR that he got, why would I need to look at things like this? That's comfortable. Let's look at these market leaders, which are always going to be high anyway.
Yes. If that suits your personality, it works very good. I mean, you might be looking into a very short horizon period. Recently, what has happened in last 1 or 2 years with the IT valuations, they have again spiked up. And if they are giving you decent return, there is no harm about it. There is no harm about it. But the point is that we guys are very afraid to get into companies and if they are selling at a very high valuation. If you would remember what has happened in 2008, was that had you been owing Infosys, it was running at 2,500 rupees, and suddenly 2008 came and it fell down to 1,100 rupees. I'm talking about those kind of blips. I'm not talking, maybe Infosys and TCS and HDFC guys are the best people in the industry, right? And they will continue in their own path. But if you are able to capture them in 2008, you will actually enhance your return. For a passive investor, getting into a blue chips, getting into a nifty.
Is sitting out with cash, waiting for another 2008 kind of scenario.
As I presented, inactivity is a big virtue.
But in that period, you might actually make your 100%, 150% anyway.
Yeah.
By being invested in these companies.
Sir, we have to do a lot of work every day. We are not professors in the college, and we have to generate some income. Yeah, let me take the example of the premier banks in US. If you look into what has happened in last 5-7 years in banks like Bank of America or Citigroup or Goldman Sachs, I mean, they used to be blue chipped kind of a blue collar banks, so as to say. And then suddenly 2008 comes and they were leveraged and they fell down, right? So every company will have its own bad phase. Apparently, they say that Infosys is going through a lot of turmoil after NRN coming back. It may give you a good opportunity to get into it. Every company will have its own bad phase. I mean, you would also remember there used to be a company called Patni, which, since you are from the IT industry, Patni was selling close to cash, especially after, during that turmoil of 2008, 2009. It had fallen very close to the cash amount. And suddenly you have this deal happening with iGate and stock prices going up by 4 or 5 times. So we want to train our mind to take a decision when that 100 rupees comes and we want to be there. So therefore that is the reason we want to keep on looking into 5,000 listed companies to figure out कि कहीं कुछ हो सकता है. I mean, over a 10-year period, even if I get 2-3 opportunities where I am able to multiply my money faster, I'll actually boost my returns.
I need your phone number.
Yeah.
Prevailing fear that if you step away from the blue chips, then for most of the promoters, there's this trend that you go public, you establish a certain brand, the industry is doing good.
Could you come again? I didn't get your question. Could you speak a bit louder, please?
There is this fear that away from the blue chips, most of Indian promoters want good industry, companies public, doing good, and then there is this trend of taking the value away from the public entity. Through a lot of mechanisms, the underlying value transfers to private entities, privately held entities. So while from the perspective that you are looking at, the numbers still look good, the image still looks good, but a lot later does the bubble burst that the value had been siphoned away. No, or not siphoned away, but gone into private hands. It is not there in the public entity. How do you guard against that?
See, there had been good people as well as crooks in the market, and they have done all sort of things in the market. We all know what happened with Satyam. We were all riding on a tiger and it just blasted. So the only way to do it is do a lot of scuttlebutting, figure out about the management, learn about the management, go to vendors, go to backend, learn about them, and at the end of the day still you have to diversify your portfolio a bit, right? Some 1 or 2 cockroaches would be there, yeah, you can't prevent, right?
Satyam got the Golden Peacock award.
Yeah, they
2 months before the.
You can't, no matter whatever intelligence you have, you are still working in a random scenario. I mean,
What I'm also saying is, besides fraud per se, or this whole tendency of Indian promoters, most of them, gradually take the money into private hands. So the image remains, the company remains, but so I am scared that besides Tata's, for example, or besides a few trusted
see, that's a very good point which you are making. That is the reason that companies who exist for a longer period of time, companies who are not interested in making quicker money, companies who value longevity, they will start getting premium after a while. I mean, look at Tatas, look at Mahindras. It is very true that if you survive and if you are consistent and conservative, you will get valuations anyhow. And at the same time, even as a fund manager, if you are able to be very conservative and deal with the clients in an ethical and honest way, and tell them that this is not the time to be in the market, this is the time to get out of the market and relax, you shall automatically enhance your trustworthiness with the clients. I mean, people say that this business has got lot many competition from mutual funds and PMSs and all those guys, but I disagree. Yeah, there is no competition actually in the market. If you are actually working rightfully with the clients, there is no competition. The brokers and the managers have actually lynched them, right? Yeah.
Is one of the virtues for value investors. So how do you evaluate a stock like, say, a Noida Toll Bridge, which was a classic value play, which has been a classic value play for the last 3 years, and the stock has stayed within a certain price range. Even though if you look at the fundamentals have kept on improving year on year.
Yeah, you have to figure out what valuations did you buy it 4 years back, and what is the valuations right now. And even if Noida gives you 2 rupees or 3 rupees dividend, what is the kind of equity valuations you're going to get out of it? At the end of the day, it's a bond. It's not equity. And that bond is having a lot of problems with the government, right? And if you look into what has happened in the last 10-15 years, even the operating profits or the PAT figures, they are not growing any faster than inflation. So you are buying something which is a asset, which is a critical asset, which is a strategic asset, which is an important asset. For a private equity guy, that could be valued at a much higher rate. But for a public market player are you just gunning for dividend yield? As Graham said, getting married for sex is not the right way, right? So dividend is not the right way to be in the equity markets. You have to look into the equity enhancement.
They have been attractive all throughout last 2-3 years. For example, IAIP220314 investment managers who have Maharashtra scooters, companies like this. But if you look at the
There again,
growth has really not happened in these companies. So if you were a value investor invested into such companies,
ILFS investment manager was again surviving on the generosity of the other lenders or shareholders, right? And you have a period where the entire infrastructure lot goes down and the money flow from the investors stops to ILFS and they are not able to raise funds. What is the portfolio of ILFS? $2 billion? 10,000 crores here, na? So if you need to acquire a mutual fund or a AMC who's managing 10,000 crore rupees, how much would you pay for it? 3-4% पे तो private equity deal होती है ना उसकी. That is the valuation which it is getting right now. उसमें ज़्यादा, there is hardly anything to think about that particular asset. It is, even in the private equity guy's hand, it will not trade at more than 3 or 4% of the entire AUM. So उसमें analysis paralysis पे जाने की ज़रूरत नहीं है. Yeah. Anyone else? Yeah.
So you mentioned, I think you made a very strong pitch for KRPL.
No, I'm not making a pitch, please. I am sharing my academic journey into this idea.
So is this your largest position?
No, I will not be able to disclose. I will not be able to talk about it. Yeah. Yeah, every company has its own beauty. Every company has its own investment theme. So if you are able to get into a food company at a low valuations, you can actually ride upon it for a longer period of time. But if you're looking at, like I shared that example of a commodity player, which was GSFC, you are actually riding on, you're betting on a particular event happening. right? You're buying it at cash and you want to exit when that event happens. So there is no, per se, for an entire portfolio, there is no time duration. Every company you have to see from a different lens. Yeah. You want to close it down now? पढ़ो यार जितना पढ़ सकते हो, that will help you a lot over a period of, जितना यूएस में तो जितने फंड मैनेजर्स हैं उनके लेटेस्ट 15-20 साल के पढ़े हुए हैं, जस्ट चार्ट डालो उनको, जितना पढ़ सकते हो पढ़ो. बुक्स अवेलेबल हैं यार, आजकल तो किंडल आ गया और यू हैव सो मेनी बुक्स अवेलेबल फ्रीली. आई मीन डाउनलोड करो और पढ़ो यार, देयर इज नथिंग एल्स. Pardon? Online resources for what? India specific for what? Pardon? Letters of Indian specific managers? I don't know many people who are writing letters. I hope Professor Bakshi writes a book one day. And I think he is a phenomenal gem existing in India right now. If you can, by hook or crook, enter into his class or get his presentations, please do so. Just go ahead and sit in this class and learn what he's telling. Or try to arrange an interview. That's about it. Yeah, Chetan Parekh is writing, Parag Parekh is writing. Some PMSs, their letters are available online. I mean, you have to find it.
Okay, so with that, we would close the session for today. In case you have any more questions, you can get them answered one-on-one with Jagpreet over dinner. So now we'll proceed for dinner. But before that, I would like to extend my thanks from the IAIP Delhi chapter. That was a really nice presentation, and hope he was able to share a lot of insights with you. Yeah, thank you.
Thank you, Manan. Thank you for inviting me.